Appreciate the seminar, man.
Hey, no problem. So now that concludes our lesson on how to use the Nexus Flowbot. We talked about different platforms, which I have subscribed as Black Box Stocks. There's also Flow Algo, and there's also Cheddar Flow. I think some of those have free trials. You just have to look into it. And then we talked about, using the charts to your advantage to confirm that flow. So if there's any questions out there, we can go ahead and answer those questions now. So looking at, I'll look through these chat questions. It says, how do you get the bull and bear indicator on the charts? So we're looking at my charting. So this bull bear indicator is a script that I purchased 3 years ago, and the person who locked down the script is no longer available. So the script is basically lost. He's like gone. He's nowhere to be contacted. So I know that I can never stop my my subscription or lose his account, or I will lose his script. But if you go to the scripts channel, you'll see that in TOS we have similar scripts that actually match this bull bear indicator right here almost to the T, if not better. So one of our trusted experts, Balbec, he's pretty good at posting Thinkorswim scripts. So if you go to the script channel, you can find this bull bear indicator and you can get the same thing. You can also hit up Def Trader. He's also has a bull bear script of some sort to where it gives you the bullish and bearish indicators. So. And yes, you could set up a free account. Someone asked, can you set up a free account on TradingView? You could set up a free account on TradingView. And also, if you go to my videos, if you go to YouTube, I created a how-to guide on how to basically follow my trade setup with a free account. So you really don't need to pay for a premium subscription on TradingView. All you do is follow my how-to guide on how to set up these candles, these moving averages, RSI, relative strength index, and the MACD down here. And it's all free. So you just got to take the time. It's a 30-minute video on how to set up everything step by step. And if you want to get a free account, you really don't have to spend any money. Okay. So someone's asking if I could explain the moving averages. Okay. So if we're talking about technical analysis, these moving averages are basically set up in a way where it shows, in theory, it shows how many days it takes for a price to get to a certain level here. So these moving averages move faster and they move slower than the rest. So all the smaller moving averages, like the 10, the 20, and the 50, they move a little bit faster according with the price. But the purple is the 100 moving day average. So it means that this is the price will be in a curvature on how much, on where the price will land within 100 days. And the red is 200 days. So I have like a color scheme I use. That's also on the how-to video on how to set up all the indicators here that you see displayed. And that's basically moving averages. Now, the prices will fall and rise based on these moving averages. So as you can see, they'll reject off these moving averages. They'll come down to support on the lower moving average, and they'll bounce up to the next higher moving average, and then they'll reject. So if you do your back testing and you become a technical trader, you come to realize that the prices move and reject off these moving averages. And the reason for that is because of the algorithms set by bot programs used by brokerage companies and institutional investors. So you can see that TA is pretty accurate, as in if you draw your trend line supports and resistances, you draw your horizontal levels. When the candles break above those, you can almost know that this candle here is going to reject off here, because everybody knows that. And a lot of the bot programs set by the brokerage companies or the firms that take everybody's money in, those hedge fund managers, portfolio managers, they have automated software that they go ahead and they set, and it has a criteria where these bot programs will buy and sell people's equities based on these levels. So as long as you trade like a robot, you could trade just like them. I mean, do you really think that portfolio managers actually take everybody's millions of dollars and trade manually? Likely not. I'm sure sometimes they do manual trading, but for the most part, they use automated software. So you just have to be emotionless here when you being a technical analysis trader, and know that when you get up to this red 200 moving day average, it's pretty strong. It's pretty hard to break. That you need to go ahead and sell your position and look for another opportunity. All right. So what is it again? Yes, the website is called Black Box Stocks. Again, if you want to subscribe to it, you can message me and I'll send you a link for $20 off your first month. If you want to check it out, so it only costs $80 to you. The video on the how-to guide on how to get on TradingView and set up your charts is on our YouTube channel. Yep, and the video for the how-to guide is how we set it up. I'm gonna go ahead and I'll show you where it is. So if you go down to videos, so you have to go down to education resources. You can click on videos and you just scroll up, and there you go. If you look for February 26, are you guys even on this page? Yeah, you are. If you go to February 26, you'll see a YouTube video, how to set up trading view charts in my MACD strategy. So that's where you can find the video. And then once you're in our YouTube, go ahead and subscribe to it, and you can access all the rest of the previous videos that I made in the past over the last couple months. All right, that's all the chat questions. Anybody got any questions out there? Anybody?
Nothing from me. Again, thanks for the video. We'll look at that 30-minute video you just posted. So, yeah, we'll take a look at that. Are you free to, if I message you, that's all right?
Yeah, if you message me any questions, I'll answer them.
Okay, sounds good. Thanks, man.
Yeah, thanks, KB.
Yep, bye-bye.
All right, I got another question about entry depending on trend. Sure. So say you're looking at this. Oh, let me go ahead and change the screen to the charts. Okay. All right. So without looking at the flow, if I was just going to do like a traditional trading and not looking at flow at all, what I like to do is I like to look at pre-market at the time. So if I'm up, I like to look at pre-market to see what the institutional investors, what stocks they are buying and what the levels are. So I could see here that pre-market here started at 4 o'clock Eastern time. So you can see that it's going up. They're buying and selling stocks, probably using automated software. It peaked at about $8 above the start price, and then it started dropping off towards the end. Now, what this tells me is that they bought this up and then they're selling off. So if we were to go ahead and replay this back down to the beginning here, you can see before the market even opened how BABA is already moving, right? You can see it's already downtrending into the open. So we can assume that it's already selling off that at open. Everybody's seeing this because as I'm seeing it, that it's going to start selling off. So if you're an active scalper, you can go ahead and upon entry, you're getting in here and you're getting on this quick downtrend for like a quick 10-minute downtrend here. You get into this profit. But what I like to do is I like to wait 15 minutes upon open. I like to draw my high and low levels of the day. So I'll wait 15 minutes, or you can wait 30 minutes. They call this the 15-minute ORB, open range breakout, or you could do a 30-minute open range breakout. Also on YouTube video, I got how to do that. I like to draw my low and highs of the day. And then after 15 minutes, you can trade within these ranges. So once I know my high, the low of the day, now I'm drawing trends. So you can see this is trending up. I like to be in the 5 minute, and I like to be in the 1 minute. So if I'm in the 1 minute, that means I'm scalping. If I'm in the 5 minute, I'm looking to scalp too. And anything higher than that, you're looking to be in the trades a little bit longer. So you could draw your trend lines here. Okay, so that's trending up. It eventually broke. Now, when it comes to trading with an open range breakout, you don't trade until the moving averages, until the price, the candles break above the high of the morning, which is 176.56. So what has to happen is these candles would keep moving up, okay? And then they'll break through and they'll come and retest this resistance. And if it wants to keep moving up, it'll go ahead and bounce off and it'll keep moving that way, okay? So that's one scenario that happens. And that's trading the, is this thing gonna erase? Oh gosh. Okay. Okay. All right, another scenario is it'll trade within the range. So it's gonna come up, it's gonna reject off the high or these moving averages, it's gonna come down, it's gonna bounce off here, and then you wanna sell when it hits the low of the day. You're gonna sell, and you could have gotten a put here. And that's trading within the range. Then there's another type of ORB trading, which is trading on the downtrend. So it breaks this downtrend here. Then it's gonna come up, it's gonna test. And if you see it bearish again moving down, then you're gonna get into a put for a continuation down. So that's 3 different types of open range breakout trading here. And that's also outlined in the video that I made as well. So as I'm trading, looking for drawing trends, I'm continuously drawing trends throughout the day. I post a lot of charts here. So I'm drawing here. Now, when you draw resistance, I'm drawing the yellow line. If it's green, I'm drawing, if it's support, I'm drawing the green line. These open range breakouts, you can outline them with a different color so that you know that they're the low and high of the day here. So yeah, let's see. So you're moving up, you're looking for a trend. This is like a downtrend here. It rejected off that. So what you're trying to look for when you're drawing your supports and your resistance trends, you need 2 points of reference. So you have one reference here, okay, and you have one reference here. You could draw your resistance. Now you're looking for support. So you have the low of the day here, and you had another bounce off here. So you could start your trend here, okay? So you basically know your up and down limits, you know your slant limits here for your, and now you could trade according to that. Okay, so you know a bounce off here, rejection, you're gonna get into a put. Okay, and previous data says the trend is here, you're expecting a bounce, so you're gonna get to a small scalp here that's gonna last a few minutes here. And then once another bounce is created, this one becomes invalid and you have to move your support here. So you're out of this put. Now the trade is trending, you had another bounce here. You already know that this is resistance here. So you don't want to commit to a call yet until we break this retest and then move out here. So this is essentially what you're looking for. It broke out here. Now it should have came down and retest and then break out. And then once that happens, that's when you enter the trade. See if it broke out here, can retest. you're looking for the breakup above the rejection, and then you're in here trading a Bible call here. But obviously it didn't do that. It kept rejecting. So now you're gonna redraw your rejection, your lines down here. And now what you're doing is looking for a good put entry. But you can't get into a good put entry until it breaks down this trend line right here. So once it breaks down this trend line, as we said, when it breaks down the trend line, it breaks down, it retests, and then it comes down. And you can see from looking at it that it did exactly that. So you could have gotten to a Bible put at this point off the rejection of the trend line, and you would have made money until it broke out the trend line here. You would have sold here at this point, you know, or you could have, if you're experienced, could have waited for the rejection of the moving averages and it kept moving down further. So in a way, that's how you trade trend lines, and all that can be applied to any time frame. So if you're looking at a 1 hour time frame, the same applies. It's no different. You're drawing your trend lines. Bar replay is not on board. Oh, okay. So same thing. Now when you're, that was the 1 minute, 5 minute trend lines we're drawing for like intraday trading for scalping. If you're a swing trader and you're trading higher time frames, such as 1 hour to 3 hours, 4 hours, even daily, then you're gonna have to draw your trend lines over the course of multiple days. Okay, so you can see that the overall trend on that 1 hourly is moving at a downtrend, and it has been since 10 March. So if I'm looking, and in order to draw your trends to see what the future price may be, you have to look at past data to see what the price was and what it was trending at. So right now we're drawing a resistance line here, back from March all the way until 20 March. So that was a 10-day downtrend here. Also, you're gonna draw your support line down here. You're gonna paint it green, okay? So you can see clearly here that Baba's been downtrending actually for a while. So we're gonna actually bring this back up here. See, you need 2 points of reference, 1 point, 2 point, and then here's a third point. You can see that through all these weeks that went by, it came and tested that a resistance level that we've already drawn already. Same thing here. You can start your point here. Once you get a second support point, can I grab it? You're gonna get a second point here, okay? And you're gonna see that you're gonna downtrend. So you got a pop here, pop here. You confirm this is a support. You got a rejection here. You confirm this is resistance. Now you're trading in a channel, okay? So, and you can adjust your channel as you can, and you could trade literally calls and puts based on here. So now you confirm point of reference here. You confirmed a point of reference here. You confirm the point of reference here. Also, you got another one here. Okay. So when it rejects off here, guess where the price is going? The price is going to this support line, right? So you could have bought rejection, you could have bought a put here and swing trade this all the way for 2 days and sold right here at the support line, because more than likely the price is going to fall down here. So you would have sold here and you would have been banking, right? Let's see, yeah. You would have sold in this range. Okay. Now you're out of the trade because you traded within the channel. You're out of the trade. Now you're going to see and expect that this is going to pop up, okay? So you're looking for a call, but you can't trade. You sold this when it hit the trend line. These channels, right, these shaded areas here are before and after hours, so you can't even trade there. So you're probably moving on and there like that, or you're just kind of seeing what you can do next. See, this is the next day after you had profited off Baba, you know, kind of dropping again and moving up. So really, in your mind, you know, you're knowing that it's going to go to the resistance line here, but it never happens. So it ends up dropping back down to support here. So at this point, if you're watching Baba every day, you're looking to enter another trade, then you're going to redraw your support lines down here where there was a bounce, and you're trading such and such through these lines, and you're looking at other factors like bull flags and bear flags. But if you want to be a technical analysis trader, you got to look. But that's trading trends right here on the hourly, and all that can be applied on higher time frames as well. So, anybody got any other questions? We got 4 people left. If you don't want to chime in voice chat, you can type it in the Zoom group chat here, and I'll answer your question if you don't want to talk.
Hey, United.
Hey, what's going on? Is that Mike?
Yeah, I got a question. So I heard some people mentioning that in the flow, sometimes it could mean that they're not opening contracts, but they're closing them. Is that right?
Yeah. I forgot to talk about that. So let me go back to the flow here. Okay. So, and I forgot to talk about that in the video. So you get a little one-on-one on this one, but it's okay. Yeah. Some of these are hedge contracts. So they could have previously been like, say, a SPY call a while ago, but as it started tanking, you know, they're in this, they got into like a SPY put, you know, try to cover themselves, they hedge their positions. But closing the positions means that they're hedging their positions by closing previous positions that are either in profit or at a loss. Flow comes in as well when you're making a big sell, you know, also. So you're not necessarily going to see any action right away if they're selling. And if it's a big sell, that's going to come through the flow saying that there's a call or a put's being purchased here, you know. So how do I figure out if it's a hedge? Here, I'll show you what I think a hedge is. This contract right here. You see this SPY? Uh-oh. You see some of the contracts are like short, like 323, 325. When I see a contract that's 2021, that's really, really far out, you see this contract, January 15, 2020, 150 put. Those are hedging contracts in my mind. And that's what I think are people, they're just hedging. They're having far out contracts and they messed up on their calls and they lost their money. So now they're hedging with really, really far out contracts to try to hedge their positions to keep from losing all their money. So that's all. And sometimes when you're looking at flow coming in and you're looking at the charts and you see nothing going on, I mean, and it's going the opposite way, and that's the same thing. That's just somebody selling their contracts. You thought there was flow coming in to buy a put or buy a call when really they're just closing it. The price is going the opposite way. So everybody's just selling off, really. That's why it's important not just to follow flow blindly, especially when it comes to SPYs. You can see throughout the day, so much flow comes in, buys and calls. There's a bunch of just crazy trading that I have to look at the majority of the puts, and I'm looking at million. I don't look at SPY unless it's like over $1 million. Then that's when I'm reporting a bunch of flow coming in, or if these came in all at one time. So this right here was 11:59. All this golden, you know, flow came out at 11:59. So I would go to my charts here. I would look at SPY, which I normally already have up all the time. And I'm going to 11:59 today. And those were all call sweeps, right? Well, when's 11:59? 11:59 is like right here. This is 12 o'clock. So they bought all those bullish call sweeps right here at this moment. Yep. And as you can see, after market, they're doing well right now. So all those call sweeps showing there's a bunch of calls coming in. So as of right now, it looks good for them. And they only got until actually it was end of day, 228 call. So they got into here and the call ended at 224. So they did same day expiration contracts. So they might have profited right here on this big spike and ended the contract in the green. I would hope so, and just sold their contract for the day. Whatever profit they can get out of it. I'm sure they expected it to go up and keep going. So I can't really tell how much value these contracts would have had at the time, at any given time, unless I was in it. Anybody else got any questions? So we got a question saying, when entering a trade, does the rate you receive your profit depend on the price of the stock at your strike price? Yeah. So you got to learn about Greeks, and you definitely want to time your position, because options, whether you profit or you lost, depends on volatility. And when it comes to options trading, you want to get immediate volatility right away, because if you're thinking about the Greeks, what Greeks are the rules to options. And theta is a Greek that means time decay. And if you get into an option and just go sideways, then you incur that. Then if you get into a Greek, like if you get into an option that lasts over a couple of days and nothing happens, then you're gonna get hit with like basically like a toll fee, and you get charged that theta price every single day. So you definitely want your stuff not to linger around too much. Eventually, you're gonna have to get a lot of price action moving up. So the rate that you receive profit depends on how far in the money you buy your contract. So if the current price of SPY is 225.92 and you buy a same day expiration, then you need to accelerate your profits. You need that price to go way past 225. And in order, how you profit is based on another Greek called delta. Now, the higher in the money you buy, the more delta you get per contract. So at the money, your delta could be 50 cents. So you'll make 50 cents on the dollar if for every dollar it moves or every cent it moves. And there's another Greek called gamma, which accelerates that delta at its rate, which is the highest, the closer the expiration gets. So, and your delta plus your gamma will equal to, so if your delta is $1, if you buy deep in the money contract, you get $1 for you get $1 plus your gamma is 25 cents. You get $1.25, every time the dollar moves up. So that's accelerated profit. And if that's a little bit confusing to you, then you can just scroll down to the bottom of our Discord, and you can go to the options trading course. You can go to What Are Greeks, and you can read up on what are Greeks. And there's plenty of YouTube videos already out there that have great explanation of Greeks. There's a little bit of reading material. There's another video on Greeks, and this is probably the baddest video that I like. See, look, I posted Gamma. The baddest video explaining how important Gamma is to scalpers trading close expirations. So this is for you, man. This is for you to watch this particular video so you can see how Gamma works in relation to Delta, because Gamma is the rate of change of Delta. So it's a very important video for you if you want to learn how we accelerate our profits right away. And we're scout traders, so we're always looking for immediate price action, immediate jump in price, boom, close expirations. We're getting faster, generating faster profits, and we're getting out. We made $500-$600 right away. When someone who's a swing trader might make $500-$600 over the course of 2 weeks. So you have to tell yourself, what kind of trader do you want to be? You want to be a scalper, or do you want to be a swing trader? And how you determine that is how much time do you have in your real life? Do you have all the time in the world to sit behind a desk because you're a computer technician? Or are you doing some kind of like computer engineer or a programmer? Or are you in retail and you work at the mall where you're at work all day and you can't check your cell phone? Then you're a swing trader at that point. But if you have time to get on flow, you have time to get close expirations and get the quick, fast profits, then you're a scalper. If you only have time to check your phone every once in a while, you could be a day trader. And if you don't have time at all, then you're a swing trader. So, and this is where people get confused, and why they lose money is because they have to identify themselves of what type of trader you are. And once you know what type of trader you are, you know where areas of focus on what kind of options contracts you'll be buying. Because there's no way a scalper is buying a swing contract, because they're going to lose their mind they're not making money right away. And there's no way that a swing trader is going to buy a weekly expiration, a Friday expiration on any contract, because they don't have time to check your phone. So they're not going to know if they're in profit or they're at a loss. Oh, and by the way, if you don't sell your contract by expiration, then you lose all of it. So you have to identify yourself as what type of trader you are. And then you have to hone in on those skills. You have to gain that knowledge, and you have to learn how to become, perfect that type of style. So last question, when scalping, what is your checklist prior to entering a trade? Okay. All right. So obviously we talked about flow today. So I predominantly look at flow because I'm not looking at the charts myself. So if I don't look at flow, then I'll tell you what I'm doing. And I'll show you right here on the charts. So I have all these charts on TradingView outlined right here, okay? I have my current charts, okay? I have my FANG charts, which are the type FANG stocks, which are Facebook, Apple, NVIDIA, Google, stuff like that, plus all the big ones. And then I have all these other charts here. I have popular charts, and I have a bunch of charts. So what I do, because I'm a scalper, is that I'm looking through all these charts right here, okay? And I'm just looking, and I'm looking for breakouts. See, I'm looking around. I got set up my charts here. I got charts here. So what I do is, say I have these 8 charts here, and I can sift through all these charts, okay? And as the day's moving on in the beginning, is that I'm looking for, if I'm not looking at flow, I'm looking for action going on here. So I look at my RSI and MACD, because RSI is relative strength index. MACD is your moving average convergence divergence. And these are indicators that you could Google and look up on what they are. And basically the momentum indicators. So if I'm looking at Facebook here and I'm looking to get into a trade, I'm looking, so say I focus on Facebook, like, hey, I'm going to trade Facebook. I'm going to make a lot of money on Facebook. So this is the focus of my trade, okay? So what I'm going to do is I'm going to draw my 15-minute ORB lines, okay? I'm going to draw, that's 5 minutes, okay? 5, 10, 15, we got a trade here. If you want to wait 30 minutes, 5, 10, 15, 20, 25, 30, you could draw your 30-minute ORB up here. So you got your high and low of the range of the day, okay? So I kind of see where the institutional investors that open are trading at the high and where they're trading at the low, okay? At the same time, I'm looking at my RSI and MACD. Now, watch my video that I just showed you on how to trade, how to do the trading setup and how to trade your MACD strategy. So you can see that this MACD is downtrending. When it gets below the 0 line, I'm looking for this entry level, right? Now, if I'm buying puts, then I'm looking for this RSI and the MACD to be heading downwards. If I'm buying calls, I'm looking for the RSI to be reset below this purple range, and I'm looking for these MACD lines to cross up green. So if you can see here, this right here is crossing upward, so the momentum's changed bullish, and you can see that the MACD is also crossing and has changed bullish. So if I were to draw these lines in relation to where I got the confirmation to buy at, we're gonna move that right here. We're gonna move this over here. You can see this is my buy range right here, right? So if I see that my RSI is uptrending, my MACD follows right after, saying boom, it's green, and we're trending, we can go ahead, we can enter a trade here. So I'm gonna enter trade, oh, we got a breakout candle. So I'm gonna enter the trade on the breakout candle, or say that after the breakout candle, I could trade. So I'll enter the trade right here, United's entry. Okay, now what contract am I choosing? I'm going to Facebook. I'm looking at the current price here. The current price is 145.23. I'm buying a call. I'm buying it in the money, at the strike price in the money. So I'm buying a 145 call, okay? And I don't even care how much it costs because I have a couple $1,000s and I'm entering in. And if I don't have money, my money to allocate towards this Facebook trade, then I'm buying out of the money call where I can afford it, okay? All right. So, and then the trade's moving. As you can see, it's moving up. Okay. My MACD is still green. It's still green. My MACD is still green. My MACD is still green. Now my RSI is overbought now. It's above the 80 band right here. Okay. So it's moving up, moving up, moving up. Once it crosses back down here, you see cross up the 80 band. Once it crosses back down here, that's a signal sell, okay? This is sell signal, okay? Right here when it crosses below. Also, a confirmation of sell is the MACD bear cross, okay? So if you go ahead and see where the price is up on the price, there. We entered here according to my RSI, my MACD confirmation of bullishness, and we sold according to my bearish divergence here on RSI, my bearish confirmation here on MACD. We're selling within these candles here, okay? So that I just showed you here I enter a trade, and I showed you how I exit trade. Now, of course, if you can't handle the heat and you can't make it all the way up here because of these moving averages bouncing up and down, so you're gonna get a bounce here, then a retest, boom, a bounce here, then it comes back down, and a bounce here, okay? If you can't handle that, then you just sell at any time, and you're actually in profit. On this spike right here, you're in profit the whole time. You're in profit. You're in profit, okay? So say that you did have what it takes to last all the way to this red candle. You just made a profit of 3% stock price. So in relation to options, it's going to be a lot more in value to your premium contract. The price of Facebook, when you bought and sold according to your momentum indicators down here, then you made a 3% stock price. Now, if you were able to sell at the top once it broke above the 200 moving average, you can make a little bit more here, okay? All right. So that's my quick analysis on what I do on how to enter a trade and exit a trade. I do this for calls and puts here. I mean, I already knew that my high of the day max is going to be right here. So once I seen this candle reach up here and I get a red candle here, then you can just go ahead and sell, you know, or you can wait it out for your indicators to cross the lower 80 band or to MACD bear cross here, and then you're sell, you're out the candle. That's it. So there you go. This same how-to is also in that video that I showed you. Okay. All right. So I'm gonna go ahead and I'm gonna end this live stream. I hope I helped you out, learn about flow, and I helped you a little bit of technical analysis. And go back, watch the videos, go back and back test, go back and practice before you use real money. All right. This is United with Nexus Investments LLC, and thank you for your time.